Hi guys, this is Mike from the JM16 group. This video is going to be about divergence. I'm going to go over what divergence is, how to spot it, and how to use it and incorporate it into your trading like a lot of us do from the JM16 group. So basically what you're using is, you're using an indicator, so you're using an oscillator. In this case I'm using the MACD with just the standard settings, 12, 26, 9. And this is just basically a bunch of moving averages shown in graph format, such you see down here. And we're using this tool in a way to spot when price is doing one thing and our oscillator or our MACD is showing something else. So basically, normally what happens is this MACD follows price. So I'm just going to start on the end here. You can see price is going down here like this. And if we look on our MACD, you can see it's doing the same thing. It's moving downwards. So it's moving in the same fashion as price. Basically what you do is you just can look up and connect these key areas or these mound points with the areas on price. So that would be the same thing as if you drew a vertical line straight up, so you can eye up those areas. So normally what happens is it's going to follow what price is doing. So in this case it's moving lower, and that's a normal progression for the MACD. Now divergence is, if you think about it as a road, if you're traveling straight on a road and all of a sudden you come to two paths and you could either go left or you can go right. This area here is diverging. You're going in opposite directions. And that's what we're looking for in terms of what the oscillator or the MACD is showing us. So let me show you a case where price and the MACD are doing two different things, or they're diverging away from each other. So if we look at these two areas here, and all we would do again is connect those mounds straight up, we could see that this time where price is moving higher, this MACD is actually moved lower. So in the case of price, we made a higher high here, but on the MACD we made a lower high. This is divergence. This is when we will take notice that price is probably lying where it's going, or it's a tip-off for where price might not actually be going the direction it should. So in this case, when we see that price is moving higher but our MACD is moving lower, that's divergence, and that suggests that price might be coming down as it did in this case. So this would be an example where you would see on your chart, James, draw this MACD in and draw this divergence in, where you would see price moving higher, but on the MACD we're moving lower, and then he would say, okay, let's zoom in now. Let's see if we get some price action around these areas to confirm what this indicator is telling us. So we're not trying to trade this divergence by itself, because that can happen a lot. And if you're in a trending market, divergence by itself can be a killer, and price can continuously diverge and you not get very big moves away. But in this case, we're using price action combined with divergence to help us get into trade. So you can see in this case here, we actually did get a little price action. Not the greatest price action, but you can see we got a bearish outside bar at this high here. It would have been great if we got a lower close here. And look what price did. It did end up moving downwards. So if we just go over that quickly again so we could see it, again, we had our MACD, which was making lower highs here, but our price was making higher highs. So when we see that, we expect the opposite to happen. Since the opposite is happening between price and our MACD, we would expect now price to move down. And we would just use price action to confirm this. So let's go through and look at a few other examples where this happens. Okay, so now remember, normally price and the MACD are going to line up. When one does one thing, the other is going to do the same. So I'm just going to move this up so we can see another example of where MACD is simply following what price is doing. Okay, so again, if we looked at, say, this mound here, which would line up with this high, and this peak here, which would line up with this high, again, look at, so you can see price is moving higher, and look at your MACD is moving higher. So there's no divergence here. Price and the oscillator are doing the same thing. They're both moving upwards. Now, if we continued on here, we can see that price is moving higher, but look what happened in the MACD. The MACD actually moved lower. So this would be a case again. So if we look here, price is moving higher, indicated by the upward sloping of this angle of this trend line, but on the MACD, we're moving lower. So this is again a sign where, okay, if we can get some price action in this area confirmed by this divergence, price should move lower. Just move on here and show another example of the way divergence can be spotted. Sometimes you have when price is going in a straight line, so you're having price not moving higher or moving lower, but it's bouncing off of the same highs area. So here we can see 3 times we bounced off the same area. But look what happened with the MACD. You had this really big move up. So initially price and the oscillator were doing the same thing. And then you had this huge peak here on both areas. Then what happened though is price made another test at this high, so we got a double top here. But look what happened with the MACD. It didn't follow up higher. So this is a case again where we have divergence. We're not making the same type of look on price as we are on the MACD. The MACD is still having a lower high where instead we have this same move up to the same area. So again, that's divergence. That's a good area to look for price action. And then we got it even again, we got a third test here. So we had 3 tests here of the same area, but look what happened with our MACD. It was still moving downwards, suggesting that price didn't have enough momentum to go higher. So again, at these areas, if we get price action and divergence, that's a great signal. So if we zoom in here a little bit and show you exactly what happened, you can see we got this perfect looking pin bar right here, confirmed by this divergence, confirmed by this triple top. That is a strong, high probability trade that there is going to be a bearish move. Using this indicator not to just jump in at any time, but we're using it in conjunction with our price action and our support and resistance to give us ideas of where to look for trade.